töltő. Szívem, én nem tudom, most erre nagyon nem érek rá. Keresd meg, nézd meg, nem tudom. Itt van videó. One, two, 1, 2. This is the Alpha FX. 1 2 1 2. Can you hear me? I can't hear you. The fish. One two one two. Hello.
Hello.
Wagwan. Can you hear me? Yes. No. Yes. Do you want to double your money today?
At least Audi R8 by tomorrow then, at least.
Have you seen the prices? They've gone up so much. I wanted to buy an RS.
It's such a beautiful car. I love it.
I wanted to buy an RS6 Avant, but ridiculous, like 30% increase in price, which is...
Whoa.
Yeah. So I'm just gonna mute everyone. If you want to speak, unmute yourself. Have you seen the prices? They've gone up. All right. So, where do we begin? Who watched the morning briefing, or who participated in the morning briefing?
Yeah, I was there, yeah.
All right. Was it clear?
Crystal clear. Much appreciated.
Perfect. Did any of you come across with the actual CPI data print, or do you know the number? Still no?
Nobody knows yet.
Not yet.
I called them, but they said, "Oh, bro, you gotta wait at least until 1:25." So
I tried to reach Jay Powell, but I didn't text him back.
Hey guys.
Tuho! What a
Yay.
fish! Aren't you supposed to be at work?
I called in sick actually. Well, I got sent back home because I was sick.
On your first week?
Second actually.
I tried to reach. Wow, it's not a good start, is it?
It's fine. I mean, they saw that I wanted to come to work, and they said, you know, you're visually awfully sick, so just go home, rest up. And
visually awfully sick. Wow, you must be sick if they said that.
Yeah.
Oh, at least they didn't say, "Oh, you look shit. Go home."
It's all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever. There are people that are born to succeed. They're called special. To hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future. Is something that's in our DNA.
So, yes.
A purpose just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground.
Sometimes it does play out well.
With a constant strive for glory.
Sometimes it's good, sometimes it's shit.
Tomorrow.
Sometimes good,
Do you feel special?
But I think we have better win rates than overall.
That's amazing.
So what was you watched one of the previous trades and played out?
Yeah, that's true. Someone else is doing something.
Victor James.
Plan for today.
Got it.
Goodbye. Waiting room. Bastard. Okay, so what did we discuss this morning? We have CPI coming up, which is one of the most important data prints whole of December. The Fed is watching, traders are watching, investors are watching. It's a gauge on the US economy, how prices fluctuate. You have a basket of goods every single month. The Bureau of Statistics, or I don't know which institution measuring, basically they have a basket of goods, tuna sandwich, craft beer, all that nonsense crap, washing powder. Fortunately, education isn't, with the heaviest weight. But it also includes, food, energy. And the higher the inflation, the worst the Fed is off, because the Fed number one enemy in 2022 is definitely inflation. And remember that if you go to any of the central bank website in the world, whether it's the Federal Reserve or ECB or any of the site, if you check the monetary policy, the goals and everything, they have a dual mandate. Every single central bank in the world. One of the mandate is price stability, which comes from stable exchange rate and inflation at 2%. Who knows what's the inflation rate today as we speak in the US?
7.7.
7.7. And what's the Fed target rate or any central bank target rate?
2%.
2%. So it's quite shit, isn't it? Almost 4 times. It's not good. So the higher the prices, the worse the economy is off. And hyperinflation is a possibility every single time, inflation is high. And the Fed already started in March the rate hikes. So if you have a look on the year-to-date performance of the 2-year Treasury yield, for example, and right now, by the way, Treasury yield curve is inverted because the short end of the yield curve is at 4.4%, whereas the 10-year is at 3.6%. I just round it up. But basically, when the short end is higher than the long end, means that investors require higher risk premium for their investment. They want higher returns, higher yields, because they deem the short term more riskier investment than the long term because the recession fears. And if you look at the year-to-date performance of the 2-year, for example, it's clearly bullish, isn't it? So the year started right here, 2022 January, and boom, from 0 to 4.3, almost even 5% was hit back during the summer. And that's because the Fed started to raise interest rate to fight this naughty inflation, which during August, I think it peaked around 9.2%. Now today we have another CPI data print, and what we know about that, CPI or inflation started to come down, started to ease a little bit, but is it really the Fed that's doing the magic? Is it really the interest rate? Who knows? I think that the results of the Fed, the actions of the Fed would crystallize clearly in the market within 12 to 18 months. And what we know about the Fed monetary policy is that the Fed was really clear about it, that they're going to slow down with the rate hikes. They're going to, let me just put my thing on charger. So the Fed is going to slow down with the interest rate hikes, but they're not going to stop. They extended the duration of the rate hikes, meaning that in 2023, even more interest rate increases will come than what they planned at the beginning of 2022, because inflation is still a problem. So the Fed admitted that, we're not out of the woods. One of the problem is caused by the labor market. The labor market is extremely tight, and the more jobs being created, the more jobs being taken up by employees, by households, the more inflation it's going to create, because they get paid, they get salary, which means that they're going to spend that money. And if they spend that money, the more money is circulating in the economy, the higher the inflation will get. Now, the Fed is now trying to push the labor market into a tiny recession, so more people losing jobs. One of the best ways is to start raising interest rate, because interest rate hurts the balance sheet of the companies, hurts the valuation of these companies, and so on. Less money is actually circulating in the economy. But I'm not going to go into too much economics today, because we do that every single day in the morning briefing. What you have to understand is that we have CPI today. Quick question: who thinks that CPI is worsening, and who thinks CPI is getting better?
My gut tells me lower CPI today.
And lower CPI means what for gold?
It means bad for the dollar and up for gold.
So lower CPI, bad for the dollar, good for gold and stocks, right?
Yeah, correct. Yeah, correct.
Why is that?
Because inflation is slowing down.
And inflation is slowing down. Does the Fed need to be aggressive with the interest rate increases?
No.
No.
Bang on. So, if you haven't read the analysis I sent out this morning to the Alpha Effects Discord, I made a whole summary and memo about what is inflation, how should you trade it, how is it going to affect the market. And what we know right now is that the market is in an upbeat mode, banking 50 basis point rate hike, and seems to ignore the pain ahead in 2023, meaning that the market is front running a little bit. You can see that it's edging higher and higher. So it means that inflation, if it's better than expected, meaning that the number is going to be lower, then the market should go up. If it's much lower, I have 4 different scenarios lined up here. If it's much lower, so anything above 0.6% to even 1% in the CPI, then the market is going to shoot off. Like stocks, it's going to go crazy, like 8-10% gain. That's what Morgan Stanley and JP Morgan said. If it's slightly better than expected or no change, then the CPI might be going to have the buy the news and sell the effect scenario, which means that the market is going to buy because, there is no change, so no change, no news is good news. But that means that inflation will be still at 7.3%. And remember that we have to watch the core CPI as well, because it's more important actually than the regular CPI. But all the beginner traders, they usually tend to be fixated on the CPI because it's a bigger number. But the core CPI excludes energy and food prices. Going back to the chart. So if we have a slightly better than expected or no change in CPI, market will buy the news, push up to the previous high, most likely. And then when the smart money comes in, when the real fixed income investors come in and the real traders who wait, then they're going to say, fucking idiots, why did you buy? Because if it's still at 7.2%, that means we're well above the Fed target rate, so they're going to slap down immediately the market. That is one of the most highly likely scenarios today. Now, if the CPI or inflation data is slightly worse than expected, so it's, for example, increasing a little bit, it's 7.3% now. No, sorry, 7.7, and if forecast is 7.3, so if it's a little bit lower than the previous but higher than the forecast, then we're going to have a drop down. And then from where next? I don't know. If we have a significantly worse than expected CPI, worse than the previous one, worse than the forecast, then gold is going to sell down to hell. And that applies for stocks as well. So we have 4 different scenarios. The market seems to price in slowly a better than expected number. Right now we massaging the weekly and the daily pivots, so we have a clear support and resistance. Any questions so far?
Thomas, sorry. What if the figure comes out exactly at 7.3? That would still be probably good for gold and bad for the dollar.
So as I mentioned, that if it's slightly better than expected or no change, or worse than expected or no change, slightly worse or no change, so the no change, no news is good news. That's how the market would interpret, in my opinion. So we have to understand the market sentiment. We have to understand. You have to think how. We have to wait how the market is going to react. Is the market going to say, okay, there's no change, so it means that, no change. So that could be the bullish momentum. The upbeat momentum could continue and price could, increase higher. But then when the smart people and the real traders come in, they're going to slap down the price, because if there's no change, then it means that inflation hasn't slowing down. It's just, stagnating, moving sideways. And that means that the Fed has another reason to raise interest rate. That's how I see. How do you see, Spine?
Yeah, that's market sentiment takes over, so that's a good explanation. Thank you.
Yeah, and the other thing is that, if there is no change, there might be a possibility that market will not move. But more likely if the... Okay, so if the CPI doesn't change or stagnates, stays the same, I think it's going to sell off. Or it could just move sideways, because the other real event is going to be tomorrow. FOMC. How many of you knows what's FOMC?
I had a different question, but I don't know if it's relevant or not.
But I haven't got the answer for who knows what's FOMC.
Fear of missing out.
Okay.
Anyway, so, okay, what's your question?
I was just once you mentioned about if the price, if the percentage remains the same as 7.2. You're right.
Okay, I'm just gonna mute everyone. Unmute yourself.
Yeah.
And every new joiner. Oh, everyone is muted, but Navid Ahmed just unmuted himself. All right. Waiting room.
So
goodbye, Navid. So these are the probabilities. Now, you often heard that trading is a numbers game. There are your numbers.
May I ask my question now, please?
Yeah, sure. Go ahead.
Alright, so you mentioned about the CPI numbers, right? If they stay the same, probably price will push up and then comes down when the smart money guys comes into the market. There's the people who hold like gold in stocks or on different shares. If the Feds increase the interest rates, that affects them some way.
Affects who?
Who holding like buying gold, for example.
So there's no interest on gold. Interest is a metal. It's a precious metal. So if you have a gold bar, does it bear any interest?
But probably on the value of it. Or not?
No, it's just a piece of metal, right? But if you have a government bond, or if you have a bank loan, if you have a mortgage, now those are the assets which either you pay the interest or you gain the interest. But gold is a piece of metal, and that is why, because the nominal, or the real yield, which is oh no, I wanted this. So the nominal yield, real yield is the nominal minus the core inflation, finlation.
Okay.
Now, if the real yield, the real return, gives you a positive number, so you get the bond, for example, a corporate bond, let's say 7% or 10%, and if you take out the core inflation, which is 6.3%, and even if you just get a positive number of 1%, that pays you 1% interest. So an investor who manages large amount of money is going to ask the question, okay, so in this high inflationary environment when interest rates are increasing, what do I do to protect my money from inflating away? And if you present the investor like, would you buy gold, which doesn't bear any interest, so your money is going to inflate away, or would you put it into a safe haven fixed income product that actually gives you 1% return annually? Which one would you choose?
Second option, all day.
Of course.
Yeah. Thank you very much.
Pip Lover is asking, is it true we need to forget about technicals during news? No. Technicals are important as well, but we always start the analysis on the macro level. Traders have to have a clear view about what happens. First they need to understand the Fed monetary policy, need to understand the communication of the Fed, what the Fed will do, or what the Fed is trying to achieve in the current interest rate and inflation environment. And if the answer is that the Fed is currently fighting inflation, then it's easy, because if inflation is higher, then it's going to be bearish for stocks and gold. So we start with the macroeconomics, we start with the fundamentals, and once we understand the potential outcomes, the probabilities, then we can assign risk weights to the different outcomes, different probabilities. And then, and only then, we can go and look at the technicals, because technicals can give you a good entry. If you have a clear support and resistance, many times on gold and US 30, just before high impact news, we noticed that the pivots, or price was stuck in between the pivots, created a nice support level, and inflation was lower than expected, so gold shoot up. So you have to monitor technicals as well, but you shouldn't rely purely on technicals, because what if the technicals most of the time fail, more times than fundamentals. So it's a mixture of both. How do I know this? Because we trade CPI for a very long time now. So every single CPI we traded before. And you can see clearly on the chart that, last time inflation was lower than expected, so gold shoot up. Here we should expect the same today. If it's lower than expected, it should go up. Now you see that 2 months ago, CPI was actually lower than expected, yet gold went down. What's the reason for this? It's because the curve was unchanged, which already excludes the two most volatile assets. And again, curve was unchanged 3 months ago, but CPI was lower than expected. So again, price immediately started to go down. And somebody wanted to ask a question?
Thomas, if I can, I would like to try to answer your question before. What is FOMC? So someone says in the chat, Federal Open Market Committee. What I think it is a committee that will try to sometimes manipulate the market in favor of USA.
Yeah.
I believe I'm correct. Am I?
Go on.
Okay, so like CPI, as you told me before this morning on the morning briefing, if the number is high, they have to push hawkish, I believe, to try to balance the sheet.
Very good explanation. Yeah.
Okay. And I believe that that's it. The FOMC.
Yeah. So FOMC, it's a committee. It's actually the central bank. So in the US, I think there's about 17 central banks, but only 12 of them have the voting rights, and they rotate the other 6. And the FOMC is this. So actually, central bank. What is the function of central bank? Central bank is the lender of last resort. Central bank who is responsible for the money supply in the economy, because you might have heard the saying, money makes the world go round. And it's true. The monetary policy that currently in practice, it's all around money. There is no gold reserve, no gold linked to money. So the Fed is printing the money, the Fed is reducing the money, the Fed is controlling the money. It's like your wife and your balls. They hold this strongly and they can do whatever they want. And now the economy, when the economy is overheating, there's too much spending, labor market is tight, it's like party like it's 2007, and inflation starts to go up. The Fed says, whoa, let's calm the fuck down. They're going to start increasing interest rate because that's one of the tools. It's not the only one of the tools which they can use to fight inflation. So they start increasing interest rate in hope that inflation might go down. There is a correlation between the two, because the higher the interest rate, the higher the mortgage rates, the higher the interest rates. People not willing to take out loans. If they don't take out loans, then there's no money creation. And we will talk about it, how money is being created. It's not with the giant HP printer. It's a different way. But yes, the Fed or any central bank is one of the goals is to manipulate the market, but it's rather the economy, not the market. Their number one job is to control the money supply. And if you go to any central bank homepage, you can read up tasks. What is the monetary policy? What is the objective? Our main is to maintain price stability, i.e. fixed exchange rate and inflation at 2%. Now, I think we can comfortably say that they couldn't really do anything with inflation. Safeguard the value of euro, price stability, and they have another, which is a dual mandate, that they have to take care of the labor market, full employment. So yes, everything they say is designed to move the markets. Everything they do is designed to move the markets, hopefully to a better good, hopefully to manage the money supply. If they can manage the money supply correctly, they can avoid recessions. They can avoid overheating. Question is, are they doing a good job? And it's for everyone up to your translation or how you think the Fed is doing right or not.
Personally, I don't think so. What I researched this morning is about every move the Fed does, it only appears on charts very long time before that. Let me explain in another way. If the Fed is proposing 2%, they want inflation to be 2%, but right now I believe it's 9 dot something.
Mm-hmm.
If they try to raise interest rates over and over again, the market only view that in a few months. In terms of inflation going lower.
Mm-hmm.
Something like that. It's all about Google.
Yeah, but I don't care about where you read it from, but the thing is that when I asked you a question this morning, you only joined the team, and I saw your name, and there was a reason I asked you, because most of the traders don't even think about reading up, okay, what the hell is interest rate? What is FOMC? How money is being controlled? How does it affect the market? Because every one of you trades on financial markets, and if you don't understand the basics of how economics is running the markets, how the Fed, the monetary policy is driving the market, then you could just give your money to your broker and fund his holiday, right? So, and I'm glad that you started reading up and started learning. It's a long time, but at least you educate yourself. You understand how the money is, moving the world, how the money makes the world go round.
That's why I'm here in the team, to learn and learn from the best.
Oh, thank you very much. Introduce me to the best, because I haven't met yet.
I've met. Its name's Thomas.
Oh, 2 minutes. All right, ladies and gentlemen.
Yeah.
Okay, so strategy today. It's quite risky, but you can place a buy stop and sell stop, because I'm expecting a quite volatile movement. So, there's one strategy: buy stop, sell stop. I would not place a trade because we don't know the number, but if it moves up 200, 300 pips, then you can catch. But you have to monitor it quite actively. This is a quite risky strategy, but this is probably the only one which would help to gain some action. Sorry, some profit. I vote on price. I think it's going to go up, but who knows? So if you're not familiar or not comfortable, then don't trade.
Yields fall down, guys. Yields drop heavily.
What does it mean for gold? If yields are down,
Up.
price should go up. All right.
Yields down.
Fixed income market knows exactly. Shout out the number if you know it. Whoa, 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 whoa! Look at that.
Whoa, whoa, whoa.
What was the number? What was the number?
Still only the rumor. Still only the rumor.
I need to see the number. We still have 1 minute. What the fuck? Price is front running. So we have multiple options. That was one scenario that you could trade, and we should have.
For CPI 6%.
Whoa, whoa, whoa!
7.1.
Wow, and price is going up. Exactly as I said. If it's well below decreasing, then
Just pass my challenge, Thomas.
Very nice.
Let's fucking go.
Do you want to see something?
Oh my god. Beautiful. I bought the 10k challenge, brother, on my FOREX funds.
Let me look in some profits.
I put 0.60, 856 in profit. So good. Much appreciated.
You're very welcome, brother.
Where was the stop? Because I got stuffed out.
Congratulations, man.
Stops.
Congratulations.
How about you, Paul? How much you made? Did you?
I'm not in yet. I'm not in yet. But he got in late, so I don't know what's going on. But it's just slippage, I guess. Yeah, just slippage.
No,
oh shit! My heart is.
I get it.
I also achieved my challenge.
So
hey,
let's go!
Buy the new, sell the pack.
That's 400 pips on the freaking screen, guys. That's 400 pips. And I'm going to lock in some more profits because that is covering the breakfast.
Thomas, how did you manage to stop on this trade?
Accurately. By closing down it now.
Because I entered a trade pretty much at the level where you indicated, and I got stopped out.
How did you get stopped out?
Because it swung up and then it swung down immediately, just a few seconds before the news.
How was your stop loss? How tight?
Well, my stop loss was...
I think it was too tight, but who's your broker?
TraderBait. I trade futures.
I can't comment on that because I don't know that broker, but I'm using FOREX, and I had no issues. I had a wide stop loss. I had a buy stop, and that's it. Maybe you want to look into what was the spread at that time, because most likely that could have caused to hit your stop loss.
That was probably my stop was too tight. and I should have.
Yeah, during high impact events, you know, smaller lot size, wider stop loss. Stops sometimes, you know, I shouldn't say this, but sometimes I don't use stop loss when, you know, I know there's high volatility coming to the market. It can go very bad, but most of the cases, if you get the direction right and if you plan, as you can see on the chart, then you should be fine. So, who made some money today?
Not yet. I'm not in a trade yet. I just wait.
I did.
I did, Thomas.
Hi, Thomas. I did also.
Always with you, Thomas.
I did, Thomas. Thanks.
Very
thanks
good.
a lot.
Very good. Very good. Thank you so much.
I was having a buy from
Full margin,
1783.
Thomas.
Full margin. Yeah, double your money.
Thank you
with the
so
alpha
much.
effects.
Thank you so much, Thomas.
You're very welcome.
Thank you, Thomas.
Rayon Chakraborty.
Yes.
How long have you been a member?
Big profit done.
I think we done for today, catching 400 pips.
So what's the next step on gold right now? I'm gonna keep
Nothing.
Up,
I'm gonna lock in profits and okay, let's discuss the economics behind it and plan ahead. My laptop just froze down. So core CPI was actually decreasing and year on year, not significantly, and the CPI year on year was actually it was slightly lower than expected. For some reason, someone shouted out CPI 6%. So now going to see Biden news and sell the fact because it was slightly better than expected, right? So this is the scenario highlighted. If you have a clear support and resistance right here, chances are high that the Fed is going to continue increasing interest rate because that change wasn't significant. It's statistically insignificant. It's only 0.2%. So instead of significantly decreasing, it's flattening out. So if you ask my opinion, use this support and resistance, and when it comes back to retest it, if it comes back to retest it, then you have a clear resistance. And I think the Fed is going to increase interest rate tomorrow, most likely 50 basis points. So what we could see is another, price comes down back to the pivot, and tomorrow, V. It's the last time I'm going to mute you. So what could happen is, price comes back to the resistance to retest it. And tomorrow, when the Fed comes, retesting first, and then before FOMC, the market will push back down. It left a massive imbalance in the market, pushed down to the weekly pivot. And when the Fed, depending on the next thing, it's whether it's going to be 50 basis points or 75. If it's 50, the market should push up above this resistance level. If it's 75, then it's going to sell the shit out of the golden stocks. That's my opinion on the market. What's next? What do you think? Hello?
Yes, Thomas.
Yes, Harry. Very good. Very good. Well, that was an easy trade, wasn't it? But make sure you lock in profits.
Magic trade, not easy trade.
Sal, you seem to be making a lot of money recently, every single time.
Forced, because I follow you. You are my bank.
I am your ATM. You can call me Abu Daddy.
Abu Daddy, okay.
Not Abu Dhabi, Abu Dhabi. Daddy.
But I'm in Abu Dhabi at the moment. I'm in
Oh, really? Wow,
Yeah.
that's nice. That's very nice.
Thank you.
Derek Baker, definitely did pass phase 1 of my challenge for my funded account. I'm going to make these funded prop firms go broke with this many challenges being passed. One lot to 1K. Thanks. Well, you're welcome, guys. Super, I was confused, unable to take it. I missed. Don't worry. Don't get the FOMO. Leave it. We're going to have, another day tomorrow. But unfortunately, tomorrow is only going to be a private Zoom for the members. So next month, we can try again on CPI. I'm going to lock in some more profits. Make sure you lock in.
Thomas, what's your expectation when the US market opens?
It's like asking, is it gonna rain tomorrow or not? What's my expectation? I don't know. We have a clear resistance level, and inflation is still shit. I mean, is it at the Fed target rate, 7.1%?
I'm just wondering what the US will get up to today, and when they sit and they see these numbers, how are they going to react to that?
Okay, anyone knows the answer for this? It's a quite tricky question. If I knew the answer, I would be a millionaire. But let's use deductive macroeconomics. Let's start thinking about, okay, know your enemy, which is the Fed. Know your other enemy, which is the market, or sorry, the investors and traders. If you think with the head of the Fed, and I highlighted 4 possible scenarios, and if you read this, how do you think the market is going to react when the New York Stock Exchange opens? Actual.
I mean, I think they'd probably want to be selling, like they'd probably want to be going higher.
Imagine how many stop losses are sitting right here. It's a cluster of stop losses. It's an invitation for stop loss hunt, right? So I think the market is going to push a little bit higher, just enough to trigger all the stop losses, and then during power hour it's going to sell off. But it's only speculation, bro. I did the first part of the job, you did the second now.
Going, Thomas.
Hi, B.
Hey.
How you doing?
I miss you guys.
No.
I'm just lurking here, watching you guys make profit. I don't trade news.
I love to trade news. And here you see the magic. 400 pips on 2 positions. It just... magic.
Yeah, you guys are crazy. Love watching it.
Aye. Aye. So
Crazy
even...
good.
Did anyone place a buy stop?
Yes.
No.
As I mentioned in the morning briefing? That's fine. Most important, don't feel, FOMO. Tomorrow we're going to have FOMC. We might be able to catch another 400 pips or maybe 4,000, who knows. Next week we're going to have other events. US consumer price growth slowed more than expected in November. What is more than expected? Come on. Financial Times. More than expected? Fuck off. Wow, the CPI. Anyway, that's inaccurate journalism. So the most important is if you missed the trade or if you didn't trade it and you see that, we're making 400 pips, don't feel bad. We're going to have, the market will be hit tomorrow and next week, so don't rush into any crazy, I want a Lambo overnight shit. Instead, what I would recommend, if you want to get ahead of the game, you can sign up to the AlphaFX Academy. I did send out a full analysis today. How many of you have read the memo on CPI and how you should trade it?
I read everything, but didn't trade
Always.
Lower than expected. Gold up, stocks up. Number was lower than expected. Boom, gold was up. It's simple economics. Sometimes it works, sometimes it doesn't. Who knows? But we do the morning briefing every single day. I changed it to morning briefings, so it's not weekly webinars anymore. And, you know, I draw up this chart every potential scenario. So it increases the chances of winning. And now you have the chance to become a member of the AlphaFX community. Go to the website, sending the link into the chat, and become a member. And don't miss out any other trades. That sounded a bit too... Slipped 20 pips, just negative this month. Catch 500 pips, very good.
Thomas, I was having an open position from 1783.
A buy?
Yeah, of course.
Wow, you're killing it. How many pips are you running in profit?
Now 255.
Nice.
Very nice. I think my job is done for today, isn't it?
It's such a beautiful job.
Thank you very much.
So good. I was here eating, you know. I came back to the stream like 1 minute before, so I was just I was just checking
guys,
the
if
buy
anybody
stops
wants
and
to
sell
buy the
stops.
Swiss franc,
It's going up.
We're only buying gold.
Double your money with the
going down.
AlphaFX.
it's at the discount price right now.
By the way, Tamas, have you seen US 30?
No, I got fixated on gold because what happened with US 30? Oi! Wow. And guess what, buddy? Higher than lower than expected. Stock should go up. Boom, boom, boom. But you know, it's
That's a freaking skyrocket there.
but it was well above, so it was only 100 pips. And if you look at gold, gold actually was 276 pips. So the effect on gold was much greater.
Thomas, I've got a question to ask you. I'm a bit confused because on FX book, it says that year-on-year CPI was 7.1. On invest.com it says 7.1, but on FX book it says 6. On investing.com.
Is it the core CPI or CPI?
CPI year-on-year 7.1, and then it says 6 on the other.
That's actually X food and energy. That's the core.
What's the website?
FX book.
My FX book?
Yeah, my FX book.
Oh.
It says 7.1. Inflation rate year on year, 7.1. Oh no, it's my bad. Sorry, my bad. Don't worry.
That's the core.
Yeah, sorry.
That's alright. Beautiful trade. Tony Rivera is asking, what time do you start the morning briefings? What time do we start the morning briefings, guys?
9 a.m. Amsterdam time, 8 a.m. UK time.
Damn right. Every single morning.
6 p.m. Australian time.
6 p.m. Australian time.
10 o'clock South Africa time.
European Philippines.
8 o'clock Pakistan. I don't know.
1 p.m. Pakistan time.
1 p.m. Pakistan time. Thank you very much, guys. So that's when we start the morning briefing.
PM Indonesia.
Thank you so much, guys. So,
Thomas, sorry,
yeah.
Quick question. I closed most of it, but I kept one running. Do you think should keep it?
It depends on, is it like a big exposure?
No.
Yeah, why not? But I'm going to, so I reduced it already to 0.2 and 1 lot. But in December, I'm taking as much money as possible from the market. And I'm pretty much with this one trade, I'm done for the whole month.
Nice.
Yeah, that was a good
Today
catch.
Gold digger.
You didn't show your charts of your live trade today. I didn't watch your live chart of the trades. What trades you have?
Because I didn't send it.
No,
I didn't send out the live.
In the
You had the analysis.
In previous classes, I have observed you were sharing the chart of your live trades, and we can see it. But today I didn't see it.
No, I didn't. So that's why you didn't trade it. There's a.
Because when I see the chart, when I see
you enter the trade. Yeah, you enter the trade. And do you know what is the reason why I don't share or sharing less? Because I know that some of you, instead of attending the freaking morning briefings and actually reading the memo I send out, that, you know, what should expect when inflation is lower than expected, instead of reading, instead of putting some energy in and learning, because I put time and effort into this, instead, you just go to the analysis. Oh, let's have a look. For example, oh, Thomas entered into buy. I'm going to buy as well. So you're looking for signals, don't you?
Yeah, you don't do nothing.
Yeah. Oh, here's another one. Boom.
No.
Thomas entered into a buy.
Not everyone.
I know.
Yeah.
Okay.
Here's one. Gold, 14 pips. A few hours later, 73 pips. Then a little bit later, boom, 130 pips. So, you know, take some time, read the information. There's value in there. And the goal is to make you an independent trader instead of just following signals and getting the easy way. Because if you follow signals, if you follow blindly anyone else, 99% you're going to fail in the long run. But once you understand how to trade high impact events, how to trade financial markets, then you will be fine for the rest of your life, and you don't need me. Look at the group. How many people actually sometimes take the opposite position as I do, and they win and I lose because they independent, right, Aman?
Yes, sir. Thank you.
Oh, Thomas, I think the buy stop and sell stop strategy is very good for the news.
Yeah. Oh, wow. You guys are killing it today. Rayon, you just made a ton of money. 80% profit, 5% here, 4.2. Wow. Lindy just made $3,200. Wow. Anyway, if you allow me, I'm just gonna finish the day because I'm done.
Thank you so much, Thomas.
You're very welcome.
Thank you, Thomas.
Tomorrow.
You as always, Thomas.
You're very welcome. Tomorrow we're going to have FOMC. Abu Dhabi.
Thank you very much, Thomas.
Tomorrow we're going to have FOMC. Do you want to live trade FOMC?
Oh yes, definitely.
Are you sure?
Yes.
Yeah, 100%.
All right. Let me see what I can do. So we're going to have FOMC, and every single who remembers the last FOMC and Brookings Institute trade?
Oh, I was there.
How was it?
Most of us were there. It was fun. It was fun and so much educational. A lot learned that night.
Yeah, so usually how FOMC looks like is I try to narrate what's happening and what the central banker or whoever is speaking, Christine Lagarde, Jay Powell, trying to translate it into understandable sentences, because some of the words that leaves their mouths makes no sense for the common people. What I do is to try to translate it, and based on what they say, try reading between the lines and place positions depending on whether I think they dovish or hawkish. So yes, we are going to trade it tomorrow. I will see if we're going to have a morning briefing, because the FOMC is in the evening, so it's going to be an all-nighter, a night shift. But until that, see you guys, and well done for today.
Thank you, Thomas.
Have a good night.
Thank you.
Thank you. Bye.
Thank you so much.
And people of YouTube, if you want to join the AlphaFX community, if you want to understand financial markets, if you want to learn more about how to trade high impact news, and you want to trade with me, take up the last membership, because it closed down, 50% discount today. All you have to do is go to alphafx.eu, take the last available membership. I think you can take the premium as well, because the button is still working, but this is a secret. I do morning briefing every single day. I'm a trained economist. I used to work for a hedge fund. You can look up the FCA registry. You can look up my qualifications, even the website. I don't think you find anyone else with this qualification on YouTube. Long story short, one membership left. If you want to get morning, daily morning briefings where I talk about economics, fundamentals, technical analysis, like we did today, like we traded this today, then go to the website, link in the chat now. Thank you so much. I wish you made some profit, or I hope you made some profit, and see you all next time.